Welcome to July's edition of Wrap the Month. What has changed from June? Stocks are still positive. Bonds are still flat. Sentiment keeps going up. And the yield curve, you guessed it, is still inverted. Let's jump into it. So the month of July was good. Not as good as June, but we'll definitely take it. As we look through the charts here, first chart we're looking at is a brief overview of how the markets performed in July. This is looking at all the major indexes and all of the holdings that are in a majority of your portfolios. The month of July, the S&P 500 was up 3.28%. The NASDAQ was up 4%. U.S. small caps were up 5.2%, represented in red. And the bond market, surprise, surprise, was basically flat and down 0.1%. As we go through it, we've got the S&P 500 cap weight was up 3.28%. The Invesco S&P 500 equal weight, which we've spoken about a bunch of times, which is predominantly the holding that's in your portfolio, had a better month in July, again, as it did in June, up 3.51 to 3.28. Those two things, though, are a big story and topic of our performance this year and why we're lagging behind the S&P 500 a little bit, and we'll get into that in another chart. But as we'll see, we go through it. The Vanguard Dividend Appreciation ETF was up 2.36. Schwab US Small Cap 5.2. Vanguard Total International Stock 3.87. International Small Cap 4.92. Short-term bond was up 0.35. Total bond market was flat, down 0.1%. Vanguard Total International Bond ETF was, again, almost flat, down 0.12%. So now, as we go through this, let's see how we did basically the past 12 months. Past 12 months, we got the NASDAQ leading with tech stocks up, over 30%. S&P 500 is up 23.3. Small caps is up 20. And our wonderful fund bonds are flat during that 12-month period of time, almost down 1%, 0.85. Now, here's where things start to get interesting as we're looking at cap weighted versus equal weight. Again, cap weight represents the S&P 500, where all 500 companies are not represented equally. There's a lot more of a higher weighting towards the FANG stocks, which we really haven't spoken about here. We'll get into that another time, but FANG stocks are basically Facebook, Alphabet, Google, Netflix, Microsoft, so on. So those stocks are really leading the breadth of the market. Again, we'll get into that in a couple other charts down the road here. But so as we're seeing here, we've got S&P 500, which is cap weight versus equal weight. So over the past 12 months, it's outperformed it by about 5% or so. Equal weight takes all 500 of the companies in the S&P 500 and represents them equally, hence the term equal weight. Why we favor that and typically have that in our portfolios is because I'm a believer in small company holdings, and you get more of a representation of the fuller market and more of a representation of the smaller company stocks. But you can see here the S&P 500 during that time, the cap weight's outperforming the equal weight. The dividend appreciation is up 18.29. Small caps are up 20% the past 12 months. International's done well, 16% and 16.43 for international, 16% on the small cap. Bonds really have not done much. 0.59 on the short-term Vanguard, down 1%, 0.85 on the Vanguard total bond market, and the international bond market is up a little bit, 0.29%. As we look at the year-to-date, here's where things get a little bit more interesting. Again, NASDAQ's up 37%. Tech stocks are flying. S&P's doing great, up 20%. Small caps underperforming large caps this year, 14.5%. And bonds year-to-date are up 2.3%. As again, we just spoke about cap weight versus equal weight. As you can see here, cap weight is kicking equal weight's butt, to put it frankly. Cap weight is up 20.61%. versus our S&P 500 equal weight, 10.68%. Past 3 months, that's been changing a little bit, but still year-to-date, cap weight is outperforming equal weight dramatically. Vanguard dividend appreciation is up 10.57 year-to-date. Small caps up 14.5. International 14.13. International small caps 13.1. Short-term bonds 1.6, our intermediate-term Vanguard total bond market 2.3, and international bonds 3.64. As we look at the market breadth, really the story of this year's market is the mega caps, those mega stocks, those FANG stocks are outperforming a majority of the market. The past month or two, that's changed a little bit. We're getting a little bit more of other stocks performing well, but that's really been the indication. So when we're looking at kind of how we're doing, we've got the S&P 500 is in a very positive uptrend. As you can see here, here's the 50-day moving average trading above the 200-day. That's a positive trend. And when we have prices, which is represented by these charts here, that also represents a positive trend. So we're doing that. So we're doing that very well. Relative strength. Again, relative strength is kind of bouncing off that 70 magic number, which can tend to lead to an overbought market. So we're right at that 69 number, nothing really there to look at. Percent of S&P 500 stocks above their 50-day moving average is 81%. So the market is, is strong right now. The percent of 50-day moving average stocks above their 200-day moving average is 74%. And the S&P 500 bullish index is 76%. So again, we've got a positive trend on the S&P 500. The NASDAQ, which is what we're looking at here, represents, again, even a bigger positive trend. We've got 50-day moving average above 200-day moving average, and we've got price clearly well above the 50-day moving average line, which represents a positive sign. Relative strength, 66%. So we got the NASDAQ, which is kind of interesting. The NASDAQ is up bigger than the S&P, but has a smaller percentage of stocks that are above its 50-day moving average, and we'll see above its 200-day. So right here, we've got the 50-day of 60% compared to the S&P, which was up over 80%. What that represents is that fewer stocks are leading the way up. Above its 200-day moving average of 47%. Growth versus value. Typically in certain markets, value tends to outperform growth. Growth tends to outperform value, and they represent different trends in the marketplace. But as we can see for the month, value outperformed growth by basically 1/10 of a basis point. So really nothing much to talk about. As you can see here, the Russell 1000 value, which represents value stocks, dividend paying, your more blue chip kind of companies, was up 3.55% for the month of July, compared to the Russell Growth, which represents more growth companies, more tech-oriented companies. That was up 3.45%, which leads to the 0.09 or 0.1% outperformance for the month of July. Consumer discretionary, again, when we're looking at different markets, you've got, discretionary versus staples. Discretionary are goods and items that people buy that they don't need. Put very simply, where staples are things that they do need. So like toilet paper, goods, things like that. Again, a more positive trend in the marketplace would be represented by consumer discretionary outperforming consumer staples. And as you can see here, discretionary is outperforming consumer staples for the month of July by 2.294%. We've got a positive trend for the month of July. We have discretionary outperforming staples by 2.2% for the month of July. Consumer sentiment keeps going up the past few months. We started at 50% at the end of last year, and it just keeps rising. We're at almost 72%. So which tends to lead you when they do these surveys and polls, 71% of the people have a positive view on the market, which tends you to believe that only 29% have a negative view. Yield curve is still inverted. You can see here the green line is below the blue line. And when that's below the blue line, that means that the 2-year yield is yielding more than the 10-year yield. Now it's come back a little bit. You can see here we've got a line, it's trending upwards somewhat, but we still have an inverted yield curve by about 73 basis points. And you can see here why that's the case. We've got the 2-year, which is the red line here, which is yielding 4.78% versus the 10-year, which is yielding 4.05%, which represents this inverted yield curve. The 3-month, it's even more inverted. It's crazy. The 3-month now is 5.54% versus 4.05% on the 10-year. Well, there you have it. That's another edition of July Wrap the Month. Positive month in the markets. Bonds, not so much. Not negative, but just kind of flat. Yield curve still inverted. That's it. Hope you guys have a great one. See you soon.